So, which question were we supposed to do? At May 2048. Page 48, May. Page 48. And this May, which one?
May 2019.
So let us read the question. Let us read the question. The question says, your part M, like you are. The various classifications of financial instruments. There are two. And they are notes. Tema Limited has provided the following extracts from its income statement for the years ended 31st December 2017 and 2018. So 17-18, you can see the profit, income, profit, capital structure. So our capital structure also we can see there. Additional information. Part of the increase in the share capital ordinary was due to a rights issue that was made on 1st April 2018, underlined 1st April 2018. A shareholder was granted the right to buy one new ordinary share for every 5 ordinary shares held at a price of shillings 120 per share. The market price of the ordinary shares before the rights issue was 125 per share, no problem. The convertible loan stock was issued on 1st July 2017. Each shilling 1,000 loan stock is convertible to 25 ordinary shares. Holders of shillings 300 million worth of convertible loan stock exercised their rights on 1st January 2018. So underline the date they exercised, 1st January 2018. Underline that date. Very good. The convertible preferred shares were issued in the year 2015. One convertible preferred share is entitled to one new ordinary share. Meanwhile, on 1st of April 2018, right that one, 1st April 2018, the company granted its employees the options to buy 4 million ordinary shares at a market price of 120 per share. No employee had exercised the rights by 31st December 2018. The average market price of the ordinary shares during the year 2018 was shillings 125 per share. Tax rate is 30% required. The basic earnings per share for the year 2017 and 2018. So you can compute basic for those 2 years. Then diluted EPS 2017-2018, also diluted for 2 years. So let's start with the basic. So basic EPS. Basic EPS is equals to profit attributable to ordinary shareholders divided by what? The weighted average number of ordinary shares. So when we start with the profits, 2017 was there. How is the financial year by the way? It ends in December. So means it starts in January. In the notes, the one you have been analyzing, from note 1. Is there any which relates to 2017? All are 2018, meaning that 2017, you just take the profit attributable to ordinary, then you divide by the number of shares the way they are there. So let's start with profit computation. So profit attributable to ordinary shareholders for 2017, 2018, 2017, 2018. Like that. So consider PAT, reported profit after tax. How much is the profit after tax for the 2 years? Huh? We have 450 and 6 what? And 650. What do you want us to subtract? We less what? Yeah? We less preference dividends. So less preference dividends. Preference div. So preference dividends. Oh wait, there's something I think I never mentioned, but I can still do it. In the capital structure, check your capital structure. In the capital structure, we have how many preference? 2. If you check in it, you will see we have 2 preference. There is the 8% redeemable preference, and there is 10% convertible preference. There is something I need to clarify there. Preference, we normally have 2 of them. We normally have the redeemable and we have irredeemable. Irredeemable, they are preference whose holders, they will be in the company as long as the company is in existence. They are more or less of ordinary. Provided the company is there, they will. Ile mnasemanga tu perpetuity. Yes. They are there forever. Kuna mali wanaenda. But redeemable, they just give you capital, but after a few years, wanachukua, you refund them, they redeem back their capital. So in accounting, redeemable is normally treated as an uncurrent liability. This one here. Redeemable is treated because, as the word says, redeemable. Redeemable means they will get back. So in accounting, this one is treated as an uncurrent liability. This is the one which is treated as part of what? Equity. So the treatment of dividends is what matters. How we account for dividends payable to redeemable and irredeemable is different. The dividends we pay this one is treated more or less of finance what? Finance cost. It's just cost to finance that loan, which is a loan at the end of the day. While this one is treated as part of dividends and we credit it as dividends in the retained what? Earnings. When the examiner is silent on what type of preference, then all preference are normally assumed to be irredeemable. So if they just tell you preference, then you have to subtract that dividend. So in this question, we have 2 preference, the redeemable and convertible. Convertible, because they have not said whether it is irredeemable or redeemable, we assume they are irredeemable. Therefore, dividends is computed on that one. The one which they are saying redeemable, the dividends we pay them is treated as finance what? Finance cost, because when we pay 2 loan, then they will redeem that loan later. So you don't subtract the dividends from redeemable. So the preference dividends here, you take 10% times 500. So 10% of 500, that is 50. Therefore, here we are talking of 4, we are talking of 6. Correct. Correct. Then now let's go to EPS computation. So basic EPS 2017, there was no effect. So you just take this profit, the 400, divide by the number of shares. Can you check the number of shares in the capital structure? So in the capital structure, the ordinary shares, 2017, how many are you seeing? It is 2000 divided by par value. Par value is 100, giving you 20. So divide by 20. So 20 would be 12 over 12 because they therefore earlier. This one gives you shillings what? 20 per share. There was no effects. Very good. Then we want to do one of 2018, but 2018 from the looks there is a rights what? Issue. So there's rights issue. We have to check the movement first. So I want us to check the share movement. I want us to check share movement. So let's carry out share movement. Share movement 2018. All right. So we start from the beginning of 2018. So 1st January 2018, balance brought down. Shares, the ones we closed with last year. How many shares were those? 20. So we closed with 20. That one becomes the brought down. Then now let's join 2018. I don't know whether examiner, this thing they did it intentionally. Check note 1 and 2, the dates. Check the dates in note 1 and 2. Did you notice the second one, note 2 is coming before note 1 in terms of dates? So I don't know why they did that, but now we'll just have to comply. So note 2 is coming before note 1. Note 2 they say, holders of 300. I hope you're seeing that. Holders of 300 worth of convertible loan stock exercised their rights. What is the meaning of exercising rights? It means you take over the shares, ordinary shares. So you will increase the number of shares. So that one happened when? First, so 1st January 2018, there was conversion. So loan notes holders converted. So we want to check when they converted, how many ordinary shares did they get? So check the policy. What was the policy if you want to convert? You get how many for how many? You get 25 ordinary for every shilling, 1,000. Yes, so you get 25 ordinary shares for every shilling, 1,000. They have converted shillings. They have converted shillings how much? Yeah. So they will be, check for me that. 7.5. 7.5. Good. Now we go back to note 1. So those dates should go like that anyway. Note 1, there was what? Inequalized issue. Dates. So 1st April 2018, rights issue. Rights issue. What was the basis? How are they giving the rights? You are to get 1 new for 5. So you get 1 new for every 5. How many are we having as we talk right now? Because they say get 1 for every 5 you have. We have 27.5. Correct? This plus this, we have 27.5. So how many will we get through the rights issue? 5.5. 5.5. Let's go to number 3. Let's go to number 3. Okay. I hope up now this question, at least EPS sinking. The convertible preference shares were issued in 2015. 1 convertible preference share is entitled to 1 new ordinary share. There is no impact because nobody converted. Sure. Unless you are told they exercised their rights, then we will check the policy. How are they converted? Note 4, let's not disturb ourselves. No employee had exercised. Sure. So we are done. Can you add for me this? 34, 33. This is 13, not 40, 33. 33. Let's calculate. Use that note 1 to get for me the right price. So X rights price. X rights price. X rights price. What was the policy? You get 1 new at what price? 120. Yes, sure. So this is 120 for every 5. And the 5, what was the market price by then? 125. Giving you this person will be holding 6. 6 will be having a value of 745. So X rights price becomes the average. So X rights is equals to 745 divided by 6. 124.16. 17. Good. Very good. Mary, it seems we are standby. Yes, it took place conversion. Mary saying conversion the conversion took place in July. No, Mary. Umerekebishwa hapo na it took place on 1st January. They were given in July 2017. But they have converted. You know, converted now is when now you convert to ordinary. Check, read the entire. So let's check one-offs. I hope you have seen those dates properly now. Let's check one-offs. Sure. So one-offs goes this way. So one-offs. Check ordinary shares before the rights issue. Before rights issue, we had how many shares? 27.5 times which price over which price? 125 over 124.17. So 125 divided by 124.17 times that period before rights issue. So rights issue took place on 1st of April. Sure. So those, how many months are those? 3 months. So before the rights issue, they were entitled to earnings for 3 good months, giving you 6.92. Then Shares after the rights issue, 30 which one? 33. So weigh them for the remaining period of how many months? Remaining period is 9 months. Remaining period is 9 months. How many shares? 24 points. Therefore, add, it comes to 31, 30, 31.67. Therefore, basic EPS 2018 will be the profit. Profit we got 600 divided by 31.67. You get 18.95 per share. Full stop. There's something I want to tell you somewhere there. So there's something I want to clarify here. Assuming the rights issue had already taken place here, Beatrice, rights issue took place, and then below the rights issue, maybe there was another new issue or conversion. So you know, any shares coming after rights issue, they have nothing to do with the rights issue. So when you are weighing them, you will say 3. Then after rights issue, you will add this plus this up to the rights issue. Then you weigh for the remaining 9. Then the one which came after rights issue, you weigh them separately. It has nothing to do with the rights what? Issue. So you weigh before, then after does not mean all the shares after. After means before plus through the rights issue. So you add. So this is before, then you take it again up to this stage. Then the one coming after that, you weigh them separately. Yeah, you check from when to the end of the year. You find new shares coming after rights issue. So if they are coming after rights issue, just weigh them down there. After year 33, you wake up and check when up to the year end. So it will not have any relationship with the rights issue. So let's go to required Roman 2 of the question. Diluted EPS 2017 and 2018. So we want to identify first. 6-7. Tunaongeza. So if there were shares after the rights issue, I'll just bring them here 200 maybe for another 6 months. Wake up, then I get the total. Sure. So fine. So I want you to identify for me the securities, the potentials in 2017. So potentials, your eyes should be checking on convertible preference, convertible loan stock, and options. Check those 3, but the ones which were there by 2017. The ones which were there by 2017. Which ones? All of them. 2017 potential ordinary shares 2017. Mnasema tuko na gani? Convert 10% convertible what? Preference, that is true. Another one, 10% convertible loan stock, tick. Options came when? 2018. So for DPS diluted, now usome vizuri diluted, si kila siku itakuwa those 2 years. Mostly, actually most questions, you find that you will be required to calculate basic for the 2 years, then diluted unapata for the last year. So you have to check keenly. Not that if basic was 2, this one must be 2, no. So in 2017, we had those 2. So we have to check the incrementals for each. Sure. Then we rank them. So let's start with this one. So 10% convertible preference. 10% convertible preference. So 10% convertible preference. You check incremental earnings. Incremental earnings. So preference shareholders, what do we normally pay them? What is their impact on the company's earnings? They are paid preference what? Dividends. Once they convert into ordinary, they will never be paid preference what? Dividends. So the company will save that which they were being paid in form of preference dividend. So the company's profit will go up proportionately with that value. So for preference, just calculate the preference dividend. So it is 10%. What was the value of the preference? 500. So times 500. There is nothing much. That is what? 50. Then incremental shares. You check incremental shares. Incremental shares. Can you check the policy? The policy. Check the policy. You get what for what? May someone note? Note 3. I check note 3. The convertible preference shares were issued in 2015. One convertible preference share is entitled to one ordinary. Hapo mtu anakuwa safe. 1 for 1, you don't know which one is for which one and for which one. So it is get one ordinary for one preference. How many preference are we having? So preference in form of shares. How many preference do we have in the capital structure? 5. The 500 divided by power value, which is 100. So we only have 5. So it means upon conversion, the holder will get how many ordinary? 5. Because you get one ordinary for every one preference. And you have how many preference? 5. So to get the earnings for incremental shares, take 50 divided by what? 5. That one gives you what? 10. Leave it hanging. Let's go to convertible loan stock. So 10% convertible loan stock. Convertible loan stock, we do the same. Incremental earnings. Incremental earnings. So incremental earnings, check the interest. Sure. Yes, you are paying them interest at what rate? 10%. What was the value of the loan stock in 2017? 1,500. 1,500. Okay. When did they convert? You know, when they convert, you treat them separate. In which? Oh, 2018. So 2017, nobody had converted. So it is just 10% of 15. But for interest, always remember tax. 1 minus T for interest. So you must multiply by 0.7. That one comes to Sure. Oh, I know why. Check Kinley note number 2. Check for me note 2. The convertible loan stock was issued on which month? Maybe the one you are saying, 1st July 2017. So these people, we cannot say they were entitled to earnings for the whole year. Sure. For only how many months? For 6 months. So that one will be 6. They were given on first, unless they were given long time ago. If it was before this year, then fine. But now these ones were given during the year. So that assessment, you can only say the impact is only for 6 months. You get how much? 52.5. Check for me incremental shares. So incremental shares. Incremental shares, what was the policy? You get how many for how many? 25, right? You get 25 for every shilling what? 1,000. What if they convert the entire amount of shillings 1,500? So if they convert the entire 15, you will take that over that and start, but for 6 months. Wait them for 6 months. So that one will be 18.75. Can you divide? Take 52, divide by this so that we get earnings per incremental shares. 2.8. So they were only 2. So rank them. The list is ranked first. So this one takes position 1. This one takes position 2, like that. If there's no problem, then write diluted EPS. Then upange hivyo wenye tunapanga. All right, so let's calculate DPS. Let us calculate diluted earnings per share. So right for me here, securities. Securities still stands for potential. Then you write here earnings. You write here shares. You write for me here DPS itself. like that. So what do you want to dilute? You want to dilute the basic. So you start from basic EPS. From basic EPS. How much was the earnings? So this one and one was 20. This one gave us 20. That is how we calculated the basic EPS in 2017. 2017, Powers was 400, Wanos was 20, we got 20. Then now bring this potential based on their ranks. So number one is 10% convertible what? Loan stock. Convertible loan stock. When they join, the company's earnings will go up by how much? 52.5. So top up 52.5. This one will go up by 18.75. So this is 452.5. This is 38.75. Divide and get the new earnings per share. So divide the two, 452 divided by that to get the new EPS. You get 11.668. Then bring position 2, 10% convertible what? Preference. This is 50. This is 5. This is 3 something. 3 or 2? 43. Don't copy. Make sure you. So new EPS will be 11. Huh? What about sure? Huh? 49. Will this out? What is the issue? Oh, this one should be 5, not 2. Yeah, sure. It should be 5. So thank you. Yes, Peter. So therefore, diluted EPS 2017 will be shillings which are 11.49 per what? Per share. That is the list. You pick the list earnings per share. Good. Let's go to 2018. So 2018, the potential. Potential ordinary shares. 2018. So 2018, those two, then we just add options. Sure. Yes, so we have 10% convertible preference. Let's just start straight. Maybe those two, then now there's an option. So 10% convertible preference. Convertible preference, there are no people who converted their preference. So it will remain exactly like this one. There will be no change. Sure. Nobody has exercised. You know, when they exercise, those who have exercised for the tour, so you will not calculate even the dividends on them. But nobody converted. So incremental earnings will be 10% of the 500, which we got 50. Speed. Then incremental shares. Incremental shares. Incremental shares, the policy was 1-for-1. 1-for-1 times 5. It will just remain the same. Therefore, earnings per incremental shares will remain 10. So there is no change. Next, go to which one? 10% convertible loan stock. So convertible loan stock, that one will have an issue. There are some people who converted. When they convert into ordinary shares, you check they were entitled to earnings for how many months in this year before they converted them into what? Into shares. So incremental earnings, there was conversion in 2018. Sure. Yes, incremental earnings. Let's start with those people who converted. When they convert, you check the company was liable up to when, up to which period. So you assess the interest up to that date. So interest was 10%. How much worth of loan stock was converted? 300. Sure. So they converted shillings 300, but on which month of the year? So that I count the number of months. They converted on 1st January. So those people, they were entitled to interest that year for how many months? 0. During that year, they were entitled to interest for how many months? 0. So tumefungua tu mwaka na wao wakakuwa ordinary shareholders. Sure. So that is 0 months. If they exercise, if they converted on 30th January, I will have given them interest for 1 month. Magi umeelewa? Unataka kuelewa nini? Aya, sawa. Jennifer, umeelewa why 0? Umeona the 0? You calculate then ask. Then there are those people who have not converted. So if those who have not converted for the whole year, 10% times shillings what? Shillings 12. So the total was 15. 300 wametoka. So we are remaining with 12. 12 for the whole year. Then what you get, the entire value, you multiply by 0.7 for tax. Yes. Maggie, now you can ask me. Oh, it explains better because wale wametoka. Sure. Okay. Okay. So these are those who converted. These ones are unconverted. They have not converted, so we assess interest on that. But if they converted, you check interest from the beginning of the year, January, up to when they exercised. There you get 94. 84. Incremental shares. Incremental shares. Incremental shares. Use that policy. You get 25 for every 1,000. I start with those people who converted 300. Then you weigh. They were entitled to earnings for how many months? 0. Then their one-offs will only be weighed with the 0 months. Plus, those who never converted, if they convert, it will be 25. 25 for at least times what? 12. So those ones for the entire year. So just work with the second one. 30. So this is 30. Divide to get, it should just be 2.8. If the value change, it should not change. 2.8. Yes, that is 2.8. Then we want to bring options in the picture. We want to bring options. We want to bring options. Options are there. Incremental earnings. Incremental earnings for options to 7 agape. 0. Always 0. 0. Lakini najua kujaribu. It is not easy. So 0. Incremental shares, we said always 0 because employees, you cannot tell them to prepare shares. So incremental shares. Incremental shares, I said you check the difference between the exercise price and the market price. Market price, check that note 4. What was the market price for those shares? Yeah? 125. And they were given to exercise at what price? 120. So the incremental is that difference. Eh? So you take the number of options. How many options? 4 million. So 4 million we are working with. So I just like 4. 4,000. So I just write 4. So it is 4 times the incremental we have said is that 125 minus what? 120 divided by 125. But be keen to check when those options were given. They were given in which month of the year? They were given on 1st, 20, within this year. So count from 1st April to the end of the year. How many months? April to December? 9. So, Joyce, naona una struggle ukienda mpaka December. Kama ni 1st April unaanza anzia January. So January, February, March, 3. Remaining 9. Nisije ya kwenda hivyo mbali mpaka una change vidole. So for options, you just check the incremental, that 5 shillings coming to 0.1 divide. You'll always get what? 0. Kindly let us rank. Let us rank. Let us rank. So in the ranking, the list is position 1. So this is position 1. 2.8 is position 2. 10 is position 3. So hapo chini andika BPS out target 5 here. So write this from basic EPS. You have all those figures. So panga hivyo. Hapa sasa kila mtu hapa kodi kwanza tu revision side. Ama uko na audit to revise. So from basic, how did you calculate basic? How did you calculate basic? And Anne is requesting. Anatumia kizungu mzuri. Anasema give us speculation of topics. Tumia kizungu ingine instead of speculation asema ni rumors. And nitasema. But no speculation, just what we think. So from basic, how did you calculate EPS? Year 2018. Yeah, it was 600, and this one was 30 something. Which gave us 95. Okay. I now bring these three based on the runs. Options will be the first to join. Options 0, 0.12, 600, 31.79. Give us the new earnings. 18.87. Bring position 2. Position 2 is 10% convertible loan stock. That one will give us 80 versus 684, 61.7, new EPS 11.07. Then bring preference. So 10% convertible preference, 50, 5, 734, 66, 79, 11, how many 10? 0.19, 99, 10.99. Therefore, diluted EPS 2018 is shillings 10.99 per share. Online, check your group. You can use it for future reference. Then they go into it more. I have found. So check that handout. I want us to do question 1, but check the handouts. You can check all the questions, but I want us to do question 1. Kuna topic umeona kwa hiyo handout yenye ujui kwa maisha yako. Unashangaa this one is coming from where? Is there a topic there which you don't know? Which topic is this one and how do we start? Okay. Is there any topic you are seeing there which you don't know is coming from where? You know all of them. That is very nice. Huh? Do you know all of them? So kuna yenye hatujui inatoka zote, si ndio? All of them. So allow me to start with question 1. Allow me to start with question 1. Question 1A is not about EPS, but in the context of unethical management practices, discuss 4 incentives that could motivate the management of a business entity to manipulate the entity's financial statement as well as the underlying supporting records. Mukonayo, do you know you have it? This one unashtuka. Ona ile handout niliwapea. Is the last solution in the last page. Confirm. There's a handout, the theory handout I gave you. Just check the last. Then unasema hey, mwalimu sasa ni nini hizi sasa imekuja kwa mtihani. Then unapata na rafiki yako anakuambia ilikuwa handout copy paste. Kwanza nakwambia hiyo ni ya kutoa nayo. Sasa siko hapo the last page. Umesema hizi sasa hiyo unajua ndio leo watu wanasoma. Why was it there and also there? Not really, but read everything in that handout. Read everything. At your free time. For now, let's do it. Yes. So let's go to part 2. You will read them at your free time. So somebody can repost it in the group just in case someone never got it. You can repost it in the group sometimes, then fine. The following information was obtained from the books of Panda Limited for the year ended 31st October 2014. So profit account, as our eyes can see. Additional information, right? Additional information number 1, the company has 100 million ordinary shares of shillings 10, fully paid and outstanding, and 50 million 8% cumulative preference shares of shillings 10, fully paid and outstanding on 1st November 2013. So 1st November 2013 will be the opening. Actually, that's the beginning of 20, because the year here is ending when? 31st October 2014. So that one starts in November 2013. So at the beginning of the year, those were the shares, no problem. 2, each preference share is convertible into 2 ordinary shares before the year 2020. Further, there are 25 million share options outstanding as at 31st October 2014, which were originally issued on 1st November 2010. 1 share option entitled the owner to purchase two ordinary shares at, not as, at shillings 10 per value. The market value of the ordinary shares of the company as at 31st October 2014 was shillings 15. The company also has 100 million 15% convertible bonds of shillings 1,000 each outstanding. Each bond is convertible into 50 ordinary shares before the year 2020. Tax rate is 30% required. The basic earnings per share. The number of the potential anti-dilutive ordinary shares. That is what has made me to do that question. Anti-dilutive ordinary shares. Then the fully diluted earnings per share. So let's start with the basic. That basic, how many marks? 2. So it means it's something which is very easy. So, right, humble yourself and start from the formula. Umepata EPS ya 20 ni ngapi? Online. Mimi nafikiria ni answer. Kumbe ni mimi nasema tu swali tulifanya jana. Tumegusa kitu yote iko na dilution. Mimi ulifanya wapi? Tulifanya yesterday. Mbona hujafanya kitu kama hicho? EPS is 2, basic is 2 per share. The shillings 2 per share. Sure. So basic EPS is going to be powers. Profit attributable to 200. 200 divided by, shares nobody converted. So just stick to your shares you have. They were 100 million. And we are working in thousands. So 100. Kwenye pesa hivyo. Mtu mpaka sasa ametoa strike. You want to work on it. The shillings 2 per share. That's the basic. Which is better than you know, when they don't convert, it's only 3 issues, by the way, when it comes to earners. Either they had shares at the beginning, they never issued, they never converted. Or they had shares they issued, they had shares they converted and issued. But here, they had shares at the beginning, there was no new issue, there was no conversion. So you stick to those shares. Good. Let's put Roman 2. The number of the potential anti-dilutive ordinary shares. Go back to your notes. Check the meaning of anti-dilution. Anti-dilution. Like, anti-dilution. Then, increase in earnings per share. Yes. Increase. Increase in EPS. So tell me this. We have, don't write this one. We have security A and we have security B. Maybe this is convertible or not and convertible preference. Then you check incrementals. When we convert, this one will increase profit by 100. And it will give us new shares. What? How many shares? 50. B, when they convert, they will get new profit 50, new shares 100. Which one will be anti-dilutive? There is one which does not dilute. Okay, which one increases EPS of those two? A. Yes, A. This one will increase EPS, while this one will do what? Decrease. So when you are told by the examiner that you check the anti-dilutive, you check anti is the one giving you more profits with less shares. It will increase EPS. But the one giving you less profit with more shares will decrease EPS. So what you do when you are told to calculate anti, you check the securities, the potentials in that question. Then you just do the incremental for each. Then you will be able to know. The one giving you more profit, less shares is anti. More profit, less shares. That is anti-dilutive, which will increase. So let's identify the potentials in this question. Then we do incremental earnings, incremental shares for each of them. Then the one which will give us more profit with less shares, that is anti-dilutive. So let's carry out that work. Nyama mingi ugali kidogo, hiyo ni anti-dilutive hapa, anti-dilutive. Wacha people from Western okay. Nyama mingi ugali kidogo ama ugali mingi nyama kidogo. Which one is dilutive? Ugali mingi? Ni? Kuna watu wanataka ugali wanakula nyama peke yake. And they are well known. So let's identify potential ordinary. Potential ordinary shares. Let's identify from top. Number one, check number 2. Each preference share is convertible. So 8% convertible preference. So 8% convertible preference. You check incremental what? Incremental earnings. So for incremental earnings, nobody converted, so we are working on assumption of what if they will convert. So take 8%. Though we were given in the travel in the schedule, preference dividends, they gave us 40, but let's calculate because not always will be given. So it's 8% times the value of preference. We had 50 million, but each had a value of how much? 10. So 50 times 10. But we are working in thousands. Sure. So it is 500. Because they said, and 50 million, 8% cumulative of 10. You know, evidence must be monetary value. So 50 times 10, 500, but we are working in thousands. Is that 400? Is that 40? Yes. So this is 40. Then incremental shares. Incremental shares. How were they allowed to convert if you wish to convert? Each preference share is convertible into 2. So you get 2 ordinary for every 1 preference. You get 2 ordinary for every 1 preference. How many preferences are we having? 50. Yes, we have 50. Correct. Giving us 100. Adding to incremental shares, this divided by this will give us 0.4. That is 0.4. So at this point, you can know whether this is dilutive or anti-dilutive based on this and this. So is this dilutive or anti-dilutive? Now I'm doing this is, you know, dilutive is one which reduces, anti is the one which increases. So it's just a matter of numerator and denominator. Which one will increase, which one will decrease? Will this one increase EPS or decrease EPS? Decrease, because this is 100. Because the denominator is more. So this one will decrease. So this is dilutive. That is dilutive. You can indicate less profit, more shares. EPS will go down. The 40 divided by 100, find it up. How much will it change? 40 divided by 100 will it change? 105. They're killing me, bro. In the same notes too. In the same notes too. In the same notes too. Further, there are 25 million share options outstanding as at 31st of October 2014, which were originally issued on 1st November 2010. One share option entitles the holder to purchase how many ordinary? 2. So you get make up options. So options. So options, they are saying you get 2. One share option entitles the holder to purchase 2 ordinary. So you get 2 ordinary shares for every 1 option. How many options do we have? 25. Yes, they are saying we have 25 share options. So you multiply by 25. However, they are saying, when was this? Further, there are 25 million share options outstanding as at 31st October 2014, which were originally issued in 2010. One share option entitles the holder to purchase 2 ordinary shares at what price? Shillings 10. The market value of the shares of the company was how much? 15. So you say times, so incremental will be 15 minus what? 10. Divide by 15. Incremental is the difference between the exercise price. Na mimi leo umengangana na kizungu mingi nini? Where do you get time to write all these things? Walimu, I have forwarded the solution in the group, which we did yesterday. Now, yesterday tumefanya hii swali. I wanted to hear from all these people. Online, can someone confirm? Mary, see who made another school evening? Mary, labda kila mtu amesema no. Not in this class. So I think you are in the evening class. Senior, maybe I did it in the evening. I recorded and posted. Na yeye akapata hiyo post na watch. Ama something like that. Huh? Yes. So possibly. So maybe what you can do, naweza rudi kwa blanketi uamuke tena ama ukae tu uone labda kama ulikopi ya mwingine sasa uone ndio. So this one comes to when you shares earnings and jaleka. So options incremental earnings about na you zero. So this is shares. This one is for shares. 16, 16, 667. Sure. So 0, 0. So this one is what? Diluted. That one will reduce EPS. Real time. Let's go to the other one. The last one, note 3. The company also has 100 billion, 15% convertible bonds of shillings 1,000 each outstanding. Each bond is convertible into how many ordinary? 50. So 15% convertible bonds, 15% convertible bonds, incremental what? Earnings. So incremental earnings, you take 15% times shillings, 100 million. Just remember to multiply by 0.7 for tax. You get? Huh? 10,500. Then incremental shares. What is the policy? What is the policy? You get how many for how many? Each bond is convertible to 50 ordinary shares. Don't complicate this work. What for what? Each bond is convertible to 50 ordinary shares. So you get 50 ordinary shares for every one bond. How many bonds are we having? You take 100, you're in shillings, 100, but each was having a par value of 1,000. Yes, each had a value of 1,000 each. So to get the number of bonds, you have to divide. Sure. So that one, 5,000. Yes, this is 5,000. So 10,5 divided by 5. 2.1. Is this dilutive or anti-dilutive? This is anti-dilutive. This one cannot dilute it. Yes. That is anti-dilutive. Because it is giving you more profit and less what? Shares. When you reduce the denominator and increase the numerator, the value will go up. So read the question. That's required Roman 2. The number of the potential anti-dilutive ordinary shares. So the examiner is asking you, how many shares cannot dilute? Yes. The shares which cannot dilute, yes, is this number of shares. So you write there and say, number of anti-dilutive ordinary shares is equals to 5 million. We're working in thousands. So 5 million shares. Those are the anti-dilutive ordinary shares. If the examiner asks which security is anti-dilutive, then we say it's the 15% convertible bonds. That is the security which has no dilution effect. Then next, the fully diluted earnings per what? Per share. Let's calculate it here. DPS, diluted EPS. So securities, earnings, shares, DPS. So have that. Hata mnafikiria iko wapi? Sio? Ukitoka kwa nyumba sasa hivi. Taweka Nairobi kesho. So securities from basic EPS. Basic, how do we calculate basic? Earnings was 200. So this was 200. This was 100, and it gave us 2. Now let's rank these three. Position 1 goes with options as usual. Position 2 goes with preference. Then bonds will take position 3. First, so we start with options. Options will be the first one. 0, 16, 6, 6, 7. So the new position will be 200. This one will be 116, 6, 6, 7. Give me the new EPS. 1.2. Why are you confusing others? 1.7. Then bring position 2. Position 2 is 8%. 8% convertible preference. So this is 40. This is 100. So this is 240. This is 216. What is the new EPS? Hmm? 1.1. Finally, 15% convertible bonds. This is 10,500. That is 250,500. This is 5,000. That is, I don't know, 221, 667. EPS will be you get 1.13. Maybe 1.1. So, therefore, diluted EPS is this one here. Diluted EPS is equal to shillings 1.1 per what? Per share. Then anti-diluted EPS, if they ask you the anti-diluted EPS, there is this one here. The one which starts to increase, you know it should be decreasing. Yeah? Then where you find it, it starts increasing, then that is the anti-diluted EPS. So this is anti, though was not questioned, but anti-diluted EPS is this one. Yeah? Here preference 1.1, eh? 1.11. Those who are copied can again put 1. So, so my main concern was on the anti-dilution. You don't go to exam, you find unaambiwa anti-dilution, na wewe ulizoea dilution. Unarap, unasema si anti, typing error. So dilution. But how do you rate EPS? It is that bad. Yes. Kidogo tu, but tukitoa leo probably mpaka saa 7. Sawa. So I don't know. I don't know how Mohammed ako hapa. Mohammed will tell us from the Quran, but from the Bible, in the books of Ecclesiastes, they have said there is a time for everything. Time to be taught EPS and time to end and do exam. Kilisho na mwanzo lazima uwe na. Hata ningewafunza tungefanya hizi vitu mpaka December baada zitaisha. So allow me to stop at that stage. Nowadays I don't. Becky is asking. Becky. Wacha niseme pole pole wengine wasisikie. Becky anauliza, kwani pilot paper kwa nini haitoki? Becky, pilot paper inatokaga kama syllabus ilikuwa review. If the review syllabus is when the other umeambiwa hapo na mwena. What there is syllabus. So Becky anafikiria pilot before exam pilot. Hata wewe? Hapana. Pilot is to show you how the new syllabus can be examined, the nature of the new syllabus. So for you to see another pilot paper from now, 5 years. So Becky, is not every now and then pilot. So I stopped predicting exam, but from experience, I can tell you for a fact. When you check these topics, group is compulsory. The group is divided into 4. There is what we call normal group, kuna foreign, kuna disposal, and there's step acquisition. So of those 4, they will examine 1. That one I'm sure about. Of those four, they will examine one, either normal, foreign, disposal, or state. But don't be surprised when in one question there is foreign and there is disposal. Very possible. There is a question of that nature in 2013, but there is nothing serious about it. Because you find this is parent, subsidiary one, and then there is another subsidiary. So you find this one here. The parent was controlling 80, and during the year they dispose a half. They remain with what percentage? 40. Then this and this Kenya shillings, then this one you find Uganda shillings. So in that case, nothing serious. If they want to prepare profit account, just check it was a subsidiary for how many months. So you count from the start up to the date of disposal. Then you prorate. So profit account, you take 9/12, 9/24, 3/12, depending. Sure. So this times that period, then this one you translate. So translation, so you find this one maybe it's a whole year or a half year. So depends. If it's a half year, unakwanga na mchezo hapo, they give you average for the year, then average for, they come the 6 months, for example. They tell you average for 6 months. So you will take the operations, you divide by that rate, but make rate for 6 months, not the whole year. Then you just multiply with 6/12. So in case they combine foreign and disposal, there is no big issue. But of those four, they will bring one. So group is compulsory. That is 20 marks we are sure about. And between reconstruction and EPS, hizo mbili zikikosa ni makosa. Makosa kubwa sana. We should expect a question there. Eyes are really on EPS, but mostly when we are really focusing on them, they do the other way around. So whenever that reconstruction. So as you prepare EPS, prepare reconstruction, both internal and external. Don't work on any assumption. Then cash flow. Cash flow ikikosa inakuwa ni mkia ni bahati mbaya, but cash flow should always be there. We are highly focusing on disposal. If they bring both disposal and acquisition in the same, no problem. But we are highly focusing on disposal of a subsidiary. But they can miss. Cash flow is not a must. They can miss, but chances is always 99%. Then these topics here are share-based and employee what? Benefits. And even segmental reports. So here also the three missing sometimes becomes very difficult. So before you go to those others, make sure these topics you can handle properly. Then now you can check those other ones. Yeah. Of this, what I'm sure of this, we have 3 questions. New topics, 3 must be there. That one I'm sure. We're just reading what kind of question, but three must be there. Then is the case that they could example deferred tax, financial instruments, insurance, banking, those ones. So those others, just make sure you have idea each. But here I'm sure of 3 questions. 3 must be there. Then theory, they will just bring the theories of these elements. But they normally bring some things most so the conceptual framework there. So the ones we wrote ones plus that handout, there's so much. Then when they bring something you don't, sometimes they bring the application, environmental, see what social, what those issues. You don't leave them hanging. Pass mark is 50%. Whoever is asking, pass mark is 50%. So pass mark is 50%. So let's come to an end. How do you want me to end? Yes. Before I end, yes. Yes. No. It can even be 8 and it is dilution. It depends on the pair. 0.1, this one. 0.4, And this one can make you to know whether it's dilution or anti-dilution. Wachana na hiyo wewe, angalia tu more. Ama hiyo mambo ya more and less ndio utaki. So anyway, whichever is going past 1 will be anti-dilution. Yes. Unaweza shikilia hivyo. Sawa. So Nisha nasema it has been a good moment. Yeah, so what I would say, you know, unajua kama relationship watu wanakuwa watu wawili, lakini ile kukosana inakuanga hapo kubwa. Na imagine hapa tumekuwa watu over 40. So sometimes kuna kuanga na misunderstanding. So you find niliongelesha Joyce kitu ndio at least Lea amke, niliambia Becky kitu ndio ala anachangamke, na mtu akafikiria kwa nini mwalimu ananionea hivi? What is wrong? If there is something of that, me I can't even recall. It was not intentional. Because here also I know we have teachers, they understand. Tunakuanga hali ya kufunza. So kama labda kuna kitu nilisema, ndio? Na mtu akasikia, hapo unajua hata pastor kwa kanisa anasema kitu hata kwani ananiona. It was not intentional. If any, I ask for forgiveness. Me hakuna kitu na forgive because to be honest, mimi mmejaribu. If I was capable to give present, mimi ningewapea present. You have really tried. Kuna class zingine za limonic na choka hata nasema wanamaliza lini. But this one you give me time, bado tungeendelea mpaka ama tunaweza patana hata after next week tuendelea kumoja. So but what I know mtapita mtihani. I don't think there will be any issue. From my observation, mko sawa. What you really need to work on is speed hiyo tu. Then you people will pass. I wish you all the best. After results, you can come back. We process mambo ya ISPAC. Nothing else. So I wish you all the best. We'll still meet in the limits of the corridor. Thank you. Yes. I also appreciate your commitment.